Sandip Sabharwal has been bullish of late, and he's been accumulating stocks both in large cap and mid cap. So Sandeep, we have come up in an impressive manner. Do you think this market has some more legs left?
I think so, because if you see, what people want is that earnings should also be strong and they should be able to buy stock prices cheaper. That will not happen. So you need some sort of negative news. So like first and second quarter due to election, heat wave, delayed monsoons. I think there were a lot of factors at play, combined with high food inflation, which has impacted a lot of sectors of the economy. Now, many of these things are going to moderate, and as we sit to talk, maybe a year from now, a lot of these things might not be there. So when you get some disappointments, that's the time you get an opportunity to buy into the markets. I wouldn't be too negative. So I think the risk reward is in favor, and 2025 should be a decent year for the markets.
25 is going to be a decent year. The risk reward is favorably placed. But would you say that, Sandeep, even for the insurance stocks, they are coming under quite a bit of pressure because that restriction, perhaps, which Street is expecting on some of the businesses done by the parent and through banks, is something which is kind of causing a problem. And some of those stocks will come up for you on the screen as well. What's the take on insurance, Sandeep?
Insurance overall as a sector has been a disappointing sector in terms of growth, profit delivery, as well as various parameters we measure in terms of which add value to the insurance franchise. So it's been sort of a stillborn sector, I'll say, where a lot of expectations were there, but then they have not yet really delivered. So I'm not looking at this sector actively as a potential investment opportunity.
Things are looking up, Sandeep. Are you basing it on valuations? Are you basing it on liquidity? Are you basing it on momentum? What gives you confidence that we are in for better days ahead?
Even markets have corrected, like markets collected 12-13% from the top, they are down 10%. Now, 3 year CAGR is nothing which indicates that there's euphoria except for some segments of small mid caps. That's a separate category. Secondly, there is too much talk of dollar continuing to rally and US markets continuing to outperform in the year 2025. Actually, if you look at positioning, trader long positioning in US dollar is at a 1 year high. US equities weightage in global equities and the overweight positions of fund managers is the highest. Typically, this does not indicate that that country will continue to outperform. It actually indicates the reverse normally. But most people are trend followers. So they see that this has been the trend, so this trend will continue. That normally doesn't happen. And we could actually see emerging markets which have overall underperformed uh, for some time could actually come back going forward as global interest rates moderate, as the US dollar stabilizes, and as the downside risk to growth subside, and potentially some global geopolitical tensions also subside. So we've already seen something happen on the Israel Hezbollah side. If post Mr. Trump taking over, there is some development on Russia, Ukraine also. I think so that also removes some lot of overhang on emerging markets as a whole.
Okay, point taken. We'll watch out for all of those macro factors as well. But just taking a step back and taking a look at the policy news break and exclusive that we have for you. After a slow start in the first half of the financial year, the government is racing to expedite the capital spending and has asked different ministries to identify critical infrastructure projects that can be accelerated. My colleague Prakash is joining us with the exclusive details. Prakash, the economy was suffering because there was this problem that government hasn't opened up its kitty that well. Is that expected to change in the second half?
Yes, we are learning from our sources that the government has asked various ministries to expedite spending on key infrastructure projects. In fact, we are given to understand that the key ministries such as railways, road transport and highways, telecom, power, coal and housing affairs have been instructed to accelerate capital spending on key infrastructure projects. In fact, the government has reviewed over 1,700 central sector infrastructure projects. Various ministries have been instructed to identify projects that can boost capital spending. In addition to that, we are also learning from our sources that the finance ministry has completed consultation with the ministries on budget estimates for FY26, and it has been observed that the government spending needs to increase by more than 45% to meet FY25 capital expenditure target. Along with that, the government has also observed that the capex will reach 90 to 95% of the total target during FY25. However, this will be higher than the last year's spending in absolute terms. Sources are also confirming that a modest increase in capital expenditure is likely in capital expenditure target for FY26.
Sandeep, now the government will have no problems in increasing the capital expenditure. It could happen this year, it may happen in April, May, but that big surge in capital expenditure is coming. And that kept the economy going, Sandeep, post-COVID. The government did all the heavy lifting, and you saw re-rating in defense, railways, any government-facing business. What happens next now? Because the fiscal situation, Sandeep, is good, which means they have ability to spend and they would like to spend. So what could be the big beneficiary when government spending comes back?
Government spending typically benefits many of the infrastructure segments. So we've seen that some significant announcements on broadband investments have been done through BSNL, which could also get funded by the government. Then there are a lot of projects coming on the hydro side, on the renewable energy side, even on the thermal side, investments on transmission towers. Road investments have been somewhat subdued for the last 1.5 years, especially in terms of order inflows. And there was a talk post this year's interim budget that the road awards will pick up, but that hasn't happened. I think that's another segment where the government could potentially make a push, because that tends to be high employment generating also. So high government spending will be good, but I think they have not been addressing the slow consumer demand aspect, which requires some fiscal stimulus or tax cuts, etc., which I think they are not inclined to do. I think we should only be happy if they don't increase taxes in the next budget.
Increase taxes? क्या बोल रहे हो भाई? Who's increase taxes, Sandeep?
Sorry?
Increase taxes? Did I hear you say increase taxes? We pay GST.
No, I said
we pay GST. We pay income tax. We pay how many? I think in India, 60% of your income broadly goes directly, indirectly, right, Sandeep?
Yeah. So and like it could be more also depending on what you consume. But the point I'm making is that they are not inclined to cut rates, although the economy needs rate cut, like some tax rate cuts or fiscal incentives for consumption to pick up. So what I said was that we should actually be happy if they don't increase taxes in the next budget.
Okay, point taken. Kunal, wanted your take regarding a couple of these buzzers. Amber Enterprises, on account of that Goldman downgrade, is down, and Honasa, which continues to fire up. Would you have a view on Honasa? Enough chart history?
So I'll skip Honasa, limited chart history, and whatever we've seen over the last 1 month or so for the stock was a very sharp correction and very mild kind of a bounce back in the context of the sharp correction for the stock. So my expectation is that the stock should drag down further, and bottom formation generally is a process which takes at least few weeks, few months for many of the stocks when they fall in such a kind of a sharp manner. Amber Enterprises could be interesting bet. The stock is coming back towards a very mild support point. I call it mild because the stock was consolidating over the last 1 month. So broadly the range for the stock was around 5750, 5800 as a support, and on the upside 6600, 650 as a resistance for the stock. So I believe that maybe closer to 5750 mark, if the stock holds on to that level, we can expect a bounce back.
Okay. In conversation with our technical experts and Sandip Sabharwal, markets are not at the highest point of the day. I could easily blame it on expiry. Kunal, there is a long list of stocks which will get included in FNO tomorrow. And interesting names, stocks which you relate to, but they're not in FNO. Zomato, Policy Bazaar, D-Mart,
Geofinance.
Geofinance. So what happens now? I mean, when stocks come in FNO where price discovery will start, what happens to these stocks now?
So, the individual price action is a lot more differentiated. There is no, very precise kind of patterns that if stocks come back in or come into the FNO segment for the first time, that these stocks move into a very unidirectional kind of a manner. It's very differentiated, depends on the positioning of the stocks, how the trends have shaped up over the last few weeks, few months, etc. So very difficult to call it, but yeah, I think this could probably aid a lot of liquidity and many strategy-driven counters. For example, names like Geofinance, Zomato, D-Mart, etc. These are high liquid counters even in the cash segment. So an added advantage once these stocks come into FNO segment. I think it adds to the kind of strategy plates for many traders, at least in terms of the FNO segment. But no decisive kind of a rule that if stocks come into FNO segment, these stocks they generally move into a very similar kind of a direction, that whether it's on the upside or on the downside.
Sandeep, some of these stocks are names you can relate with, Zomato, Policy Bazaar, D-Mart, but for the first time they move into FNO, and the price discovery is going to be very different. Sharp swings after numbers, immediate reaction to the news. What could change for, let's say, some of these popular stocks? Zomato, market cap 2 lakh crore. Jio, market cap north of 1 lakh crore. What do you see things changing? How do you see things changing for them now that they would be part of the FNO basket? Sandeep.
Normally, the liquidity improves. That's one factor which obviously is there. They become eligible to come into some indices, etc. So I think that's another part which is a longer term outlook where you need to monitor some of these stocks could come into some indices. And on the flip side, people have the ability then to play the stocks on both sides. Like right now, for most of the stocks, you can just play the long side if you are buying them, or if you are if you are short and it's only in cash, then you don't buy them. Here, if you have a negative outlook, you can actually play it the other side. And if your view is right, then the stocks could, on the downside also, you could end up making money. So I think price discovery overall tends to be better, especially if the market capitalization is high enough and liquidity is sufficient.
Point taken. I think we'll try and connect with our colleague Anurag as well to get you the latest what's happening in insurance space. Let's pull up some of those stocks and see whether there's an intraday recovery, because he's picking up from his exclusive sources, and these are the top IRDI sources who say no directive has been given to insurance on bank assurance business capping. Remember, that was the point that was causing nervousness and worry in the market. But if IRDI has not given any directive on any capping, that would mean some sort of a softening of sentiment coming in, and that's why some of these stocks are now slightly turning from the bottom of the day. So we'll try and connect with Anurag to get us more details on this story. Any directive, they say, will only be given after public consultation, and press release would be issued. So there's no use of speculating whether this is something which will happen or not happen. As of now, no directive has been given, and they will be very consultative in their process. Separately, we have Naresh joining us on the show. Naresh, at least on the charts, any recommendations for Maxfin, HDFC Life, SBI Life?
So technically, Maxwell looks the most interesting one because that has shown a lot of say relative strength in the previous moves. So out there, this correction is a buying opportunity. So closer to 1100 is a good entry point for the medium term.
That's a take coming in as far as some of these insurance companies is concerned. Kunal, if I can kind of interest you in this one as well, any sense in bottom fishing?
Not really. I think these stocks have underperformed. So I was looking at the weekly charts, and this is almost like the 8th or the 9th, almost like consecutive weeks for many of the stocks, SBI Life, etc., where these stocks are falling. And typically we expect that these stocks, whenever these stocks come back into at least a 1 week or a 2 week recovery, break past about their 1 week, 2 week swing highs, that's where we may anticipate a bottom formation. So it's always better to try and wait out for that confirmation rather than build on that anticipation to the stock, because the trend is on the downside. So if these stocks are bought into on declines, it's possible that the declines may continue for some more time.
Point taken, but let's now take it across to Anurag, who's been picking this story. Anurag, a very important one, because the street is worried that there's going to be some sort of restriction, but you are saying that there is nothing of that sort right now which they have issued, right?
Yeah, so as per the top IRDA sources, IRDA has not issued any directives to insurance companies regarding the capping of bank assurance premium. And if anything would be there will be a public consultation first, and after that only IRDA will go ahead. Because we have seen that recently Finance Minister Nirmala Sitharaman and IRDA Chairman Debashish Panda has raised some concern about the mis-selling through bank assurance channel. But we have spoken to the top sources in IRDA, and they have said that till now, there has been no directive issued to insurance companies for capping of business through the bank assurance channel, because bank assurance channel is an important channel for life insurance companies. HDFC Life in FY24, 65% of their total AP premium is through bank assurance. For SBI Life, 52% of new business premium is through bank assurance channel. For ICICI Pru, 28.7% of their business is through bank assurance channel. So for life insurance companies, bank assurance model is the major channel for their overall business, and there was some concern by FM Nirmala Sitharaman from IRDA Chairman Debashish Panda. But as per IRDA top officials, as per IRDA top sources, there has been no directive issued to insurers for capping of their business through bank assurance model.
Thanks, Anurag, for getting us that clarity. At least the stocks are recovering from the lows of the day. We'll keep tracking that story more closely as well. But in the meantime, insurance is one space that we posed as a question to even Vikas Khemani earlier in the day, and he sounded fairly positive on the sector. Hear out his take.
Private sector banks, we like public sector banks, especially right now, PSU banks, we think there's a good risk reward. We like insurances. We own life insurance specifically in our business. So again, these are the categories within insurance, both general and life, both under-penetrated category, both have, significant growth ahead of us. So these segments we like, and within that, of course, you have to identify companies, but some of the capital market oriented plays, I feel in a shorter term or medium term have kind of little bit overplayed. So you might see low return in that. But, banks and insurance is something where we can see from next 12 to 18 month perspective, good returns. Though structurally the whole basket is in good, but these I just mentioned from a medium term perspective, you could see some interplay of returns.
Well, we've got this entire insurance space, frankly, if you think about it, has not really lived up to its expectations. Where it was versus where it is. Then COVID happened. Post-COVID, it appeared that it could start making a comeback, but that's not translated into reality, so to speak. We've seen a lot of false starts, Kunal, for this space.
Yeah, false starts and I think real endings for these stocks, because we've not seen any major trend building up. So there was a point, in fact, I think 4 months back, in the month of July or August, somewhere that the likes of HDFC Life, etc., they were coming very close to their lifetime high levels. Yeah, SBI Life had a moment where the stock had made a life highs, managed to break past I think about 1800 odd levels. Last I remember, and I think from there these stocks have slipped. The concern for these stocks is not that the trend is not lasting, but whenever these stocks reverse, the reversal is very sharp. So it's very difficult to hold on to these stocks, even if you've bought them at lower levels and expect that these stocks sooner or later would probably get back into a trending breakout mode. So I think that's the bigger concern for these insurance stocks. They've never gotten to that big breakout on the medium or the longer term charts, and on the way down, these stocks they correct very, very swiftly.
Okay, let's see which way it heads from here on, but time now to take the closing trade ideas. Naresh, you go first.
So continue like Wipro, the stock has come back to those levels of 570, 75, a good entry point. Overall, the structural chart still very positive on it.
Wipro is one IT name that is doing well, and Birlasoft was the other one that you liked. Kunal, what about your pick?
I'll go with Shriram Finance as a buy. The charts are looking a lot more attractive at current levels. In fact, the stock has come back towards a close, potentially about the 20-day moving average if it closes at current levels. So would be keen to be bullish on the stock over the very near term.
Okay, point taken. With that, slipping into very short break. Don't go anywhere. Last 30 minutes of the trading session. That 3 p.m. move on the expiry day. We'll track that when we come back.
If you like this video, then like, share and subscribe to ET Now.